Hello, hello. Welcome to the Future Leaders Report, September 10th, 2024. My name is Hamilton. I'm here with the Trading Initiative. Apologize about earlier. Having some troubles with my voice right now. As you can tell, I'm losing it. So I wanted to wait, maybe see if it was going to come back, and it doesn't feel like it's going to come back. So we're going to go ahead and get through this report as quickly as possible because my throat hurts right now. The focus of this specific report, the Future Leaders Report, is to key in on those recent IPOs breaking out into either 52-week highs or all-time highs in particular, right? We're looking for stocks that are significantly either underpriced or going through their price discovery mode. Typically what we see, particularly in bull markets, these recent IPOs really start to flourish as risk comes into the market. But as of right now, we know summer volatility is really kicking in. And a lot of that global liquidity, et cetera, is kind of mellowing out a little bit. A lot of uncertainty around the election process, a lot of uncertainty around next Wednesday's interest rate cuts. And so, it doesn't surprise me to see this particular scan kick out a lot less tickers than what it normally does, right? So what we did was we isolated everything that was within the 52-week highs, about 10%. There's a lot of stocks on this list if we don't filter through to proximity of 52-week highs. Some are like 30, 40% away, and those don't interest us. We want to focus on the names that are showing relative and absolute strength against the market. And like I said, it shouldn't be a surprise to see there's not a lot of stocks on this particular report this week or realistically over the last 4 weeks. It's just not a whole lot of new names, but there's a lot of reoccurring names. And I think that's the direction I want to take this particular Future Leaders Report, is there are a lot of reoccurring names on this list. There's a lot of uncertainty in the market right now. There's some relative ratios that are breaking down. There's some absolute performances breaking down. There's a lot of uncertainty. There's people are climbing the wall of worry, potentially for good reason. We're not in that camp yet. We're not in the market's about to flip bearish and we're about to break down into new bear market lows yet. We're just not there. The weight of the evidence isn't there. But having said that, we're also not opening a bunch of new exposure, particularly into these risk-on areas of the market. We have defensives, right? We have lower volatility stocks. We're opening those up. As a matter of fact, we're opening up some today. Right? But one thing that continues to show and shine through these reports is that strength tends to beget strength. What does that mean? That the strongest stocks in the market, even when the market pulls back, still remain strong. They might not be continuing to break out 10% per day, but they're not selling off. If you look at the percentage away from 52-week highs, there's a handful of these names that have been here all year and they continue to be here. KVUE is a trade that we're in, which we're going to look at in a second, pressing up in towards those new highs. AHR, which has been on the list for multiple weeks in a row, pressing up into new highs. BTSG, we don't have a position, but has been on the list. GEV, we have a position on, pushing up into new highs. VLTO, we have a position on, pushing up into new highs. CWAN, pushing up into new highs, we have a position on it, right? So a bunch of these names are continuing to show time and time again. So when you're thinking to yourself, should I be looking to close the exposure here prior to a potential top? You can make your decision. You're an adult, but typically the way I like to play it is I want to stop out when the stops get hit. I don't want to front run a market turnover because in the event the market doesn't turn over, which there's always a chance it doesn't, guys, these are typically going to be the names that continue to work the best for you. So it makes no sense to sell them now with anticipation of something that hasn't happened yet. So let's talk through a couple of these names, right? KVUE, we're going to start with that because this is at the top of the list. This actually turned free for a bunch of the traders inside of TTI that were able to grab contracts on this. There's also a large portion of people that are trading shares. This should be a free trade across the board, shares and options, right? Able to flip this for over 100%. Take complete risk out of this trade. And from a shares perspective, your stop should already be split up into a profitable trade here. This is a consumer staple large cap. It moves 1.74%. This is a basic stage 1 into a stage 2. We're about 85% of the way through to the first price target up near that 23.5 or 24 area. There's nothing to do here on this particular trade except continue to let it work. There's no entry here, right? But if you're in it and you got in it over the last couple of weeks, this is one of those few names that continues to press up and to the right, even as the market chops around. The next stock I want to talk about off of this list is AHR. Tongue-in-cheek here, for whatever reason, I don't know why, but these medical names, particularly the nursing medical names, just continue to outperform, right? There's a couple of these on our watch list, but AHR has been on this watch list since it crossed $15 a couple of weeks ago. This thing has gone from $15 all the way up to $23 nearly today, closing at $22.93 in just 2 months, 3 months. For whatever reason, once again, it's not up for us to decide whether or not this is the right or wrong price. Leave the value guys for that. They're going to look at this stock in a couple of weeks or months and they're going to go, whoa, this is either overpriced or underpriced. We don't care. We stick a line in the sand and choose the path of least resistance and own it. That's what we do. So above 15 bucks, this has been on the list for multiple weeks in a row. Once again, market can do whatever it wants. This particular list, though, tends to work its own magic. So if you find yourself in a trade like AHR, which we've gone through over the last couple of weeks, do not try to time the top. You don't know how far these things can go. Once again, there's a couple of these specific names, this specific industry group on our watch list, right? AHR and a couple other ones I'm not going to get into because they're not on the list. If you're in these names, they're still working well. Congratulations. GEV, this is a General Electric spinoff. So once again, GEV spun off into three separate stocks, right? GE, GEV, and GEHC. GE is now aerospace and defense. This GEV is your household staples, right? Your consumer staples, your consumer defensive stock. And it's working well, right? For whatever reason, right? The consumer is still buying their products, whatever you want to call it, coming up and tapping our 203 type of price target here. Once again, we don't want to get in front of this and try to sell it off. We want to continue to let this thing go as long as it wants to go. But this is a slower mover. We expected it to move a little bit quicker with the 3.93 ADR, but it's in one of those slower moving sectors, right? Consumer defensive. And it's not necessarily the smallest stock in the world, right? It's $55 billion stock. So it's not going to move 10% per day. You're not going to get the huge volatility breakouts that you're going to get in the small mid-cap land. This is a large cap breaking out to all-time highs. We're going to want to own this, and we do own this, right? Above 183, tapping our first price target. Who knows? Next step up could be somewhere near 235 if you're in contracts. I don't believe this is a free trade yet, but it's getting close. If you're in shares, this should already be a free trade, right? Stops moved up. It's all about just managing your winners right now as the market shops around. And we have a bunch of these on this Future Leaders Report, right? VLTO, a name that we've been in for months now. I'm talking going back to like Q1 of 2024, right? Opening this back up in February just continues to work well here. Came up and tapped our 112.50 price target, and we said there's probably going to be some resistance up there. Looks like there might be. Now, this is a software stock that's bucking the trend of the rest of software stocks. It's a large cap software stock. It's a little bit slower mover for a software stock, 1.28, but it's been a relative consistent winner. This is probably a better shares trade than a contract trade, but we're going to want to add in here once again, just like we did every other price target as it gets tapped and then pressed up and over the 126.5. So there's an opportunity to continue to add here. Screw what everybody says. The market's about to fall, blah, blah, blah. Let them prove that. As of right now, VLTO does not look like it wants to fall, holding its bullish momentum regime, holding north of an upward sloping 200-day moving average, giving us an opportunity to add more in above 112.50. We have not added yet. I'm adding this right now to the list. If we get back up there over the next few days, we could potentially be adding into VLTO, and obviously this is already a free trade with profit taken out multiple times, right? So we can add back in there because the trend is still continuing. Why not? Next price target up somewhere near that 130 area. Don't get in front of this stuff. Who knows how far it'll go. CWAN. Another trade that we put on relatively recently this time. BRB setup here. If you want to grab a relatively tight play here off of this Future Leaders Report, your entry is the 23.5 area, which we broke up and we're finding support here at the 23.5. The reason why I like buying these pullbacks, if you didn't get in originally at that 23.5 area, is it's the same price target, right up here near 31 bucks. But my favorite part is you can really tighten this stop up because we already broke out. Now we're pulling back. If you pull back within the range, if it doesn't hold this level, you're out. So you could really tighten up this stop loss and juice the risk to reward. Anywhere you want, doesn't really matter. But if it falls underneath that gray box, it's probably a false breakout or just the wrong time to be owning C1. So if you haven't already entered this and you want to try to buy some shares or some options contracts, depending on what you're looking to do here, you can buy this 23.5 area bounce with a stop loss right underneath range high. Price target up there at 30 bucks. You can see, and I'm serious, this is a massive 14-to-1 risk to reward. Want to give it a little bit more wiggle room, feel free. It's still 6-to-1, wherever you feel comfortable here. But it's a completely different trade than taking it off of the original 23.5 breakout where your stop is going to be somewhere down here, right? Still a nice trade. 4.71, but now that it's broken out and pulling back, you can really tighten that up and say, hey, within the range, I don't want it anymore. So this is actually a pretty good setup if you haven't been in it, right? This is another software-related stock, except this is a mid-cap. Moves a little slow for a mid-cap, but it's a very obvious level that you're looking to try to buy the breakout. This is not saying it's going to work 100% of the time, but it's very obvious where you want to be long. The last one I want to talk through here is probably ATAT, and it's because we're not taking it. I'm going to show you guys something really quick. ATAT from a technical standpoint, see the little overhead resistance here, you see the volume gap. If you guys want to try to trade this, feel free. The reason why I don't feel comfortable trading it, and therefore it's not going out as a trade idea, is simply because it's not the market cap, it's not the terrible earnings, it's not above the 50 RSI, it's because it's headquartered out of China. It has been a very difficult trade sticking these Chinese breakouts. Certain stocks will stick it for weeks and then die in one day. Other stocks will never stick it. We took a stab at Chinese stocks back in May. 1 in 4 of them worked. This is just an incredibly difficult area to be trading the market. So a little bit of sector knowledge here. We don't really want to be owning Chinese stocks until KVUE, which is your Chinese Internet ETF, is trading north of 33.5, representing a potential stage 2 breakout from a sector standpoint. AT looks attractive from a bottom-up process because you're pressing in towards that overhead supply. And for a bottom-up style trader, it makes sense to try to get long. But from a top-down trader like we are, where we take the weight of the evidence, we take sector and industry trend, take market cap trend, we take all the stuff into account to set us up for the highest probability trade. The risk trying to trade AT&T is very high with Chinese stocks not backing it up, right? So out of the future leaders, C1 is the one name that I think offers an opportunity here if you missed it the original time, and the rest of it is just managing these open positions that we have, right? The market is churning right now. There's a lot of volatility. There's a lot of uncertainty, and therefore some of these higher beta, small, and mid-cap recent IPOs just aren't popping up the way that they were a couple of months ago, but that's fine. If this bull market continues, we expect this list to continue to expand, but if it doesn't, we're in a bunch of winners. We're in some losers right now too. It's important to manage both sides of the spectrum, winners and losers, and get out on top. Okay, so once again, here's the Future Leaders Report. If you're inside of TTI, obviously you can read the write-up. C1 is going to go out as a trade idea, as a potential ad coming out later tonight, along with a couple other stocks that we found end of session. If you're not inside of TTI, you want those trade ideas and reports like this every single day, in-depth write-ups, there's a link in the description. We would love to have you. My name is Hamilton. I'm here at the Trading Initiative. If you like this type of content, please like and subscribe. Thank you again for putting up with my raspy voice. It's probably going to be another 2 weeks because I'm on some medication. Try to get through it. All right.